Who's that?
What? On the phone?
Yeah.
Josh and Nick. Josh wants to do some project and he wants me to help him out.
So you know you play on certain markets more than some. Obviously, just around a certain price point, that would make it easier for you to understand what the level 2 is going to be doing. Those are sort of different every single day.
What do you mean?
So, for example, Kodak might trade usually at around that same price, the median price of 9.5.
Mm.
So when you look at it like ticket rents, when it's all online, are you more intuitive to know that at certain points might go down or up or something like that, or is it more just a random every single day?
Oh, like
you're more familiar with, you obviously like on a market, you're more familiar with some. Does that mean level 2 is more familiar as well in terms of its actions?
No, not really.
Because obviously
The chart is more.
Yeah. Okay.
I mean, obviously level 2 has to be similar, right? For the chart because that's what's printing out.
Yeah.
But it's easier to read on the chart.
What's up, Steve-O? How's it going, man? Pretty shit day yesterday, right? Yeah, it's Friday. I'm definitely, for the first time ever, I'm looking forward to the weekend, actually. This week has been pretty up and down, pretty much. The first red days I'm having back-to-back in about 2 weeks. I think the momentum shift was more dramatic than I anticipated, and all of the stocks were going higher than what I thought.
No. Still a stock. Garbage.
How's it going, my man? How are you?
Oh, no, yeah, no.
Yeah, they are. Bulls are strong, but that's a good thing. I mean, the most dramatic one was SPI. That was bound to happen. Now that happened, yesterday we had. Yesterday one not as exaggerated, right? So it's just gonna. It's not gonna be. This is the kind of stock you blow up on, right? SPI. This is the kind of shit you gotta be really worried about as a short seller. Thanks, man.
Is he going to a losing streak?
Yeah.
I appreciate it. Yeah, so thanks, man. Thanks all. All right, so what are we looking at today? Let's talk about what happened the last 2 red days that I had. The first one was about, I think, $180. So that one was pretty much the first day SPI happened. This was, I mean, this move, I'm pretty sure, blew out a lot of accounts, especially that move, as you guys can see from here, from $32 to $48, almost $50. I mean, in 2 candles, that is crazy. That's a crazy 2 candles. This is like a Tesla move on a small, what's the price? What's this thing at right now? It's at $9. Do you know what I mean? Yeah. Yep. Yeah, the true back. So that was one of the things. So I survived on this one. And
And I wanted, and I
Wait,
knew,
come on.
yeah.
can you keep quiet for a little
Wait.
bit? And you know, until so survived on that day. I did get squeezed. I was down about, you guys have seen the videos, right? I was down about like 2,000 on it, but made it all back, which was alright. But what happened was yesterday, I was doing good with the short side, but what ended up happening was I tried to long. Do you remember which stock that I tried to long? PCK, right? Yeah, so I tried to long this thing, and it's funny because it was the first long that I was trying to, which was pretty disappointing. So I actually got in after the washout. I wanted to get this bounce, so I got into this and it went into a second downside hold, and then I added into that, right? And I had about 1,000 shares or something like that by then, hoping for this bounce, and it did bounce. What happened was Ross bought it and immediately dumped it, and when he dumped it, all right, if you guys can see here. So my average was somewhere down here. When Ross bought it and dumped it straight away, it went broke the VWAP and it almost went into a downside hold. That shook me out. So I got out into that. I literally got out right there for about $1,000 loss. And then my average was I think my average was like 860. I'm pretty sure. I had $1,000. I had 1,000 shares with an 860 average or 850, something like that. This thing went all the way to $10. I mean 10.50 pretty much. So that's almost a $2, you know, $2,000 I would have been up on that thing. The problem was I was listening to Ross when I was trading, and that's if you listen to Ross or other people that are, it would dramatically affect your decision. Because when you hear him saying, oh, I'm gonna sell, I'm selling here, you get checking out easy. Because you're assuming, oh, he's gonna sell 30,000 shares. You're not playing. You're factoring his, you know, decisions into making your own decision. So yeah, I shouldn't have gone as big. So my first, I knew this bounce. I knew this was gonna happen. I mean, if you look at SPI, right? If you look at SPI when it went on like this day here, after this first washout, this, if you buy in this area, they do bounce, right? So this I have documented this, and I've seen a lot of stocks that went parabolic, and I actually have the chart of them. They all bounce like this. So it's a solid strategy. The problem was first thing was too emotional, because if you guys remember, one of my rules was don't trade pre-market, and I got a pre-market, if you guys remember. And Steve-O, you were pointing out, why are you fighting the front side and at the pre-market? Yeah, so two mistakes there, right there. That got me already frustrated. When the day opened, I was down like $400 or something like that, which was a problem. And then I got myself out of that, and I was up a little bit. Yeah, so I dug myself out of that, and I was up a little bit, and I decided to trade that. But the problem was I was listening to Ross, and I shouldn't have. Because it did bounce. It gave me the bounce. I didn't take an opportunity on that. And as soon as I lost on it, what I did was I realized I was frustrated. The reason why I was frustrated was I was actually, me and Aaron were talking when this was in halt. I think this halt was like 30 minutes halt or something like that. And we were talking about it, and we're saying this is going to go into a second downside hold. Right? We're saying right there, it's going to go into a second downside hold. Though I was saying that, I ended up buying 300 shares here at 950 area, I think. I bought 300 shares at 950 area. And then I added, I think, about 700 shares here, right at the bottom, for the VWAP, thinking a VWAP would hold. And then I was listening to Ross. He wanted to buy it as well. And there was other people, you know, that wanted to buy it as well. But as soon as Ross dumped it and this went, I thought, uh-oh, this might go into a third downside hold. And yeah. So the frustration came. There were 2 great days that I was really waiting for, right? You know, I was really wanted to capitalize on and gain, you know, decent amount of gain on these 2 days. But it didn't happen. That's where the frustration came. And I started making really bad decisions. So what I did was I realized that I was making decisions. As soon as after that trade, I didn't even try to make the money back. I just walked away. I went to bed, and yeah, that was it. And then I was done for the day. So sometimes you got to realize when you start revenge trading, when you realize you're being emotional, you know, and you know it. When you're being emotional, you start making mistakes after mistakes. Yeah, that's kind of what happened to you, Steve. All right, if kind of revenge trading or something like that. Was it you or some other guy? Someone texted me saying that. Anyway, so they were down about $50, and what happened was they were trying to, you know, chase that $50 loss back, and ended up losing $360, right? So the best thing to do when you realize you're emotional, to walk away, right? If you're one of those people who cannot get it under control, to walk away. And yesterday I chose to walk away, and that was that. So I pretty much gave back this week's profit, because I think I was up 500 on Monday, like 560 on Monday, and I was up like 500. Yeah, it wasn't you, Steve. It was someone else. I'm pretty sure. Let me see. Yeah, it's I think it's a hit the bid or hit the bid guy from the chat. Yeah, so Monday and Tuesday I was up, you know, both days I think 550. So I give back the 1,000, which is fine. You know, today's another opportunity. What really frustrated me is I didn't take, as a short seller, I didn't take opportunity. Yeah, I lost it yesterday. Donald J. Trump. Yeah, I lost yesterday. I was down about $1,000. I took a look. The funny part was I was actually up on shorting, right? But I wanted to long this market, and the one long play that I took, I lost $1,000 on it, which was ridiculous. So, and then I was like, I realized I was emotional, so I decided, you know what, I'm gonna walk away. I walked away, which is fine, because you know, trading is not. It's a long game. It's, you know, you're not in it for a week. You're in it. Yeah, and I'm sad as well, but in a way, it's better. I mean, that if I had I kept trading with that kind of, you know, chasing revenge mentality, I probably would have been down 2,000, 3,000. So it's a smart thing. You got to know when to walk away. Sometimes, and sometimes the best thing you do is walk away, and I walk away, and that's fine. It doesn't hurt my pocket because it's a gain that I made for Monday and Tuesday anyway, right? So that's what happened. The market has picked up, you know, and right now I'm a little bit short biased. The reason why is because I'm you know, SPI was the one that I was really wanted to long, like this and yesterday as well. Yeah, it was. Man, I was really excited to get into the long as well, but it went the other way. It happens. But I walked away, you know, and I think that was the smartest thing to do. Even this kind of move, for example, after market. I mean, if you guys have the scanners and go look back, look at this thing after market. It went from $4 to $9. So as a short seller right now, you have to step back and let them go. You gotta let them go because they're going higher than what higher than you would expect. So right now for me, what I'm gonna focus on is when I'm thinking I should go in here, I'm gonna wait. I'm gonna hold back and see what it does. And usually previously you could go into the parabolic short and then exit into the washouts. But right now the parabolic shorts there's a lot of follow throughs. So any parabolic is being actually supported and being bought up, as you guys can see here, right? So what you want to short is now the backside on these things. It should be either a flat, kind of a flat top. When it flattens like this, this is the area where you start shorting, using that as a risk. But even in this case, you can't let it rip on you, because it can and it will go higher than you expected. So I would have a solid risk right there, shorting into that. When I see I don't want to see follow throughs. So what a follow through is basically, if you guys zoom in here, so right here as well, as you guys can see right here, this is kind of flat top, so you can have a starter too, but you can see there's a follow through. So every dip, it gets bought up Every dip it gets bought up, and you'll be able to see in the volume as well, as you guys can see, right? Every dip it gets supported. They won't let it wash out. Yeah. When you see that kind of thing, have a very tight risk. Risk management is really, really crucial in this kind of market. Because if you don't have your risk, you easily can blow out. I mean, I'm pretty sure a lot of accounts got. If you think about SPI, man, logically thinking, who would buy this at 44, 48, 46? Not a lot of people would buy into this. This move, this dramatic 2 candles move, happened because accounts being liquidated. Happened because accounts blown up. And when your account blow up, what the broker does is it automatically, exit the position on at the market price. That's what this move is. And after everyone is liquidated, this is a clear sign saying the only buyers at this point were short sellers blown up. Once they were out, there was no more buyers. That's why it went into a downside hold, right? So you gotta understand. So to short into these things, obviously let the things blow off and then go into the bad side. Yeah. Nah, I got wrecked yesterday, Kevo. The one long day I tried, man. Anyway, so let's get back into it today. The short locates were really cheap on this CBAT. It was like, I think 6 cents before. Now right now it's at like, it's 5 cents right now. If you guys want to take them, I literally just got it. I'll show you guys. I paid for it, 0.05 cents. So if you guys want to look it up right now, I got it and it went back to 36, yeah? So you gotta keep an eye out for this thing. It's literally, this broker is so crowded, there's a lot of competition, yeah? So when it pops, just wait for it and take it. But lesson number 1, don't have a starter pre-market. The reason why I got, screwed yesterday is because, well, I came in to do the, the watch list, and I saw something that looked good and I jumped in it. I broke my own rules, and that's right there. It's hit me in the face. No pre-market trade, no fight in the front side. I do those things, and I ended up the day down 1,000. So the rules work. You just gotta, respect it. Discipline. I think I've been loosey-goosey with it lately, so I need to fix that. So this one here, okay, let's get into today's. And a few people ask me what a sympathy play is. A sympathy play is basically what happens is okay, SPI happened. SPI was bound to happen because shorts got, a lot of shorts were hitting the lows and got trapped, and it kind of marked a momentum for, the trend to go into the long side, right? That's the first thing. But after this, what happens is if you're a small company, right, and you're thinking about, if you're a small company, you see it, SPI, this small company that was at $2 going to $64 per share, and everyone is excited and everyone is looking to, to go, what's next, yeah? All the buyers are banking onto this thing and they're looking to buy, what's next. If you're smart, CEO, what you want to do is you put out a phony press release or some sort of news. That would drive the price crazy because everyone is excited to buy into this. People who, Kevin he took like a week off. He was waiting. He wasn't trading. He was waiting for the market to reignite to come into the market. So is a lot of buyers. Ross was waiting for this market to happen to go aggressive. So, same. That's PECK. I think that's pretty much what happened. They put out phony release. It goes higher. Now it's back at $7. So that's you gotta understand that now. What a sympathy play is pretty much that. That's what a sympathy play is. There's a big momentum going. This sympathy plays, they don't go as much as the original one that it reignites the market. No, Aaron is still shorted, mate. He ain't changing his ways. But yeah, so let's look at this one. see. Alright, so as you guys can see, there's no news on CBAT. I have no idea why it's going up. I mean, it has news on Monday, 29th of June. You know, so, yep, small caps and small land is back. Oh, that's Aaron. But yeah, so I don't see any news on it. I look to short, but I don't underestimate the volume it's generating, 24 million. So if you guys remember, SPI, it generated ridiculous amount of volume pre-market. Look at that volume. I mean, this was thick. I mean, there were 1 minute candles that are like almost 1 million. So I generally have a rule where if whatever the pre-market volume is, multiplied by 10, and I would expect that much amount of volume to come in the day, right? So unless you see majority of the volume is done, and you know 24, you know, to like 100,000, 200,000 volume, unless I see that, after that, if I start seeing the backside is when I start shorting. If you start shorting out of the gate, you know majority of the volume hasn't come through yet. So you got to keep that in mind. These things can go way higher than you expect, and they're good for long. I mean, it's tough because they really don't have a range. Yeah, you can't buy them because you know you can get dumped on. Look at this. I mean, it went to 4 and it immediately went back below 2, or I think on the other, I think it went to like 330 area. This is like funny print. This is the dark pool print. That's CBay. No news on it. SGBX. This was really. I mean, look at this thing again, from $1.50 to $5 per share. This was aftermarket. So if you try to short into this parabolic move, this is exactly what I was talking about. If you try to short into this parabolic move, you get squeezed $1 per share, $2 per share. But you gotta wait for this backside, let it blow off, let this backside, let volume start leveling off, then you can short this, risking the highs. Right? Before, last week and the week before, you can short into the parabolics. And then it would wash out and you can cover. Right now, you can't touch this part. You gotta let it go. Because they go higher than you expect them to go to. Okay, so this one was yesterday parabolic. Let's see what the news is. I mean, the yearly chart is pretty. I mean, there's a lot of overhead resistance. You guys can see here and here. I don't think it's going to push that way that much. I mean, if you guys can see on this particular day, right, it opened with a gap up, which is going to do today to the same, pretty much same level, and it had 21 million volume, right? Today, right now, 9 volume already. So I expect this to generate above 29. I mean, 25 million. I mean, around 50 million, maybe something like that. Higher than this day's volume, I would assume. But we'll see. But right now, it looks pretty dead. I don't like shorting this. I don't like shorting something that washed like this. If it comes to the pre-market high, I would definitely have started this area. And then I'll wait to see if it's going to break and go higher or not. But I'm going to have to be very tight with my share size and very tight with my risk level. And you guys definitely need to do the same thing. TATT. Okay, what's the news on the other one though? Again, no news today. Yesterday has announced incremental requirements. All right, so they do have some sort of news. Trump Jr. Something we do with Trump Jr. on Wednesday. All right, so Trump Jr. got a consulting fee, so that from this company. So this company is saying that they paid him. Part of the reason why it went up. But let's see. Alright, burn rate 300,000. They got about 60 million, so I don't think they need any cash. So highly unlikely they would raise. Though they do have ATMs. No, they got a lot of ATMs. Active share registration. So these are the underwriters. Underwriters is like what the company goes with, like would have a contract with to dump the shares, and different underwriters would have like different way of dumping it at the market. Some of them would squeeze shorts, and some of them would just push a pre-market and dump it. So if you can collect data on those and study how they do it, how the stock play out, you can be able to kind of predict what each might do. What else is there? I mean, is there anything that I didn't cover? Any questions, guys? Any stuff you guys want me to look at, or any fundamentals? STMD. Is that for longer, Stevo? Okay, so let's look at the fundamentals for this thing now. A lot of people banked, except me yesterday, the last 2 days. Man, pretty frustrating. Alright, so cash burn rate. So the float is 22 million, and they have about 60 million outstanding. So they still have market cap is not as big. Institutional ownership, very small, yeah, 0.3%. Insiders, 29%, almost 30% of it's held by insiders. Look, yes, there's no news on it, but also what comes first is price action comes first, and that price action is driven by the volume, yeah. So you gotta react. I mean, look, obviously, even SPI it was a shit company. They drove it right now. It's at $9, right? But the problem is, if you shorted it just on the news or just on the fundamentals, you would have blown out, yeah. So same thing goes with here. I do expect this thing to go higher today. Just because the amount of, I mean, it's already, 37 million volume. I mean, we haven't seen this kind of volume in a month or two, right? Oh, okay. Let's have a look at STND. STND. Yeah. So mergers. This kind of mergers, I don't touch them because I've collected data on them. They don't really move as much. You expect them to watch. They don't. They just go up and down within a particular range. What do you think? What's your opinion on mergers, Kuma?
No, they stick around with one price.
Yeah, so they stick around in one price. So yeah, it's a massive gap up. But if it's a merger, let's look at what the news is. So mergers are usually like that. What is it called? Let's see. Wow. Okay. Yeah. So it just got bought up for $158 million in cash. So yeah. So this kind of stocks they don't really move. They don't have range. They just get stuck. So with this thing, I mean, it's almost 30 million volume pre-market. Jesus, it's literally unheard of. I mean, some stocks don't even trade this much market hours, let alone pre-market. So I'm looking at this thing, thinking, if there's the first clue what they do is, if you guys notice with SPI, it was very hard to find, because I was trying to find short into this. Yeah, I was looking for shorts into this, especially after I saw that. There was no shorts available. But once it came to this area, shorts were available. And a lot of people were getting the shorts. So you gotta understand, when they suddenly make the shorts cheaper and available, that's a red sign for me to kind of take a step back. Because one thing, it means that if it's cheaper at trade zero, then on a lot of other brokers it's going to be easy to borrow. When something is easy to borrow, a lot of people longs, especially from brokers, people who are with brokers that don't allow them to short. It would become easy to borrow, and they can short it without a fee. And those people do not know how to short properly, so they start hitting the lows. When they start shorting the lows, they get squeezed, and that creates a kind of a cascading effect, and that thing goes parabolic, yeah, like a SPI kind of thing. I mean, we've had a couple of those, Kodak, SPI, similar thing. SPI was really holding that level. I mean, it was a crazy move. So my thought on this one right here is just, I'm not gonna touch this thing. Let it do what it does. I want to see majority of the volume out, and then I'll short. I mean, let's look at SPI, what it did this day. I mean, look, if you stayed patient, here's the logic behind it. So you've seen a major amount of volume per market SPI, right? A merger is like when two companies come together, or one of them buy another one for like a fixed price. So they'll say a $33 or something like that, or the companies just merge together. With big caps, it's a little bit different. You crack me up, Mr. Donald. But yeah, so even with SPI, listen to this, right? Even with SPI, if you've seen this a lot of volume per market, and you're expecting 10 times the amount of the volume that was in pre-market. So what you got to do is, you won't be shorting any of this area, because majority of the volume is not out. So, but you can start looking to short into this, because that's when the majority of the volume will be out 10 times, right? So if you start shorting this area, then you're safer, at least. If you have obviously risk management has to be on point. Your share size has to be small enough to allow you for this thing to go $10, $20, right? So when you have a starter share size, because this thing would also give you 10, 20 bucks, right? So have that flexibility. What you also don't want to do is go in and out for like $3, $4 losses, because those things add up 10 bucks pretty quick. So I think those were the couple of things that you guys gotta do. Aaron did that into this. He was going in and out, got chopped a little bit, and then but pretty hammered it right into that. Yeah, I mean, that's what I have in mind. Just price action comes first. Stay patient and stay patient and let this thing work out. Let the majority of volume out, because it would give a downside, given that it doesn't have any news. Nobody knows where this shit is going up. I mean, literally no news whatsoever. No news whatsoever. So, don't know why it's going up. And you gotta keep in mind that they do not need to raise. Yeah, I mean, I think this company might. I think this could potentially be manipulation to dump as well. Look at this. So they spend about $800,000 a month, and right now they got 1.6 million. 1.6 million cash and cash equivalents. So they only got 1.6 million. So they got about a month or maximum 2 months to go with the account that they have. So if they need to dump today, but the problem is I don't see any active shelf registration unless they did one before this. A lot of fake news, huh? All right, so 25.15. What? Jesus Christ. 2019, 2020, 4. So last time they registered to dump stocks was in 2015. That's what it says here. But they got a lot of correspondence with the SEC. Six or seven. I think it might be hidden. Secondary power. Right, mate? You okay? Sounds like you're. All right. So sometimes they would have offering, but it would just be hidden, yeah. Employee benefit plan. Okay, broker or dealer register. Okay. It just says my file pursuit to check with the person that is broker or dealer registered. I think there might be something in here. So sometimes they would hide it, but they would have to do some sort of filing in you know how much they're gonna pay the underwriters or something like that. That's where you would find it. June 3. Okay, so they have a lot of outstanding shares. It's really hard to actually find out. I'm not seeing anything here though. Okay. Let's look at the these three. Okay. Yeah, I'm not sure. It feels like they have some shares though. It's really not showing me here. I have a feeling they would have a hidden ATMs. There's a way to find out, but you gotta go in ACC and stuff. Sorry guys, this is taking way longer than I thought. So this is the document we've already seen. Trade under 14. Thank you.
It's
Well, so far there's nothing that I can find, so I think you're just gonna have to trade it based on price action. All right, any question, guys? Any other stocks? I was shorting this thing here around $8 area actually. I mean, look, all of them, and these were like super manipulated. They just took advantage of, you know. I mean, there were a couple of guys that banked. There's one guy banked about 1.1 mil just yesterday. Just ridiculous amounts. Yeah, it's absolutely insane. I mean, look at this guy. Look at that guy. How crazy is that? 1.1 mil. 1.16 million just yesterday, and I think majority was short on SNW, short on SPI, short on POLA, short on NETE, and short on CBAT. That's crazy, right? Everything everyone was buying, this guy was scooping up all of the shares everyone was trying to buy. This guy was selling it to every buyer. You know, like these are the guys that, you know, these are the guys that decide, you know, I mean, not him per se, but, you know, guys would go major size like this that would push. I mean, if Russ could push it with his, you know, 30,000 shares, you know, these guys could definitely just single-handedly can influence a direction. No, this isn't fake. This isn't fake. This is real. It doesn't show you what average. With Dash Trader, it doesn't show you the average. I mean, unless you're in the trade, it doesn't. Nah, this guy's legit. I follow him. He banks big. I've been following him for years. Yeah. Look at that. He literally put a stop to the thing. I'm pretty sure it's Centerpoint, Dust Trader Pro. Literally, something goes parabolic, puts a stop to it. Just put 1 million shares to be sold right there. No one can pass through. And then covers right at the bottom. This is what my data says. You gotta cover late in the day. Short, look at that. Like pretty much a ceiling, and then him buying into this, the break of view up, is what made it bounce. Yeah. How much is that? 1, 2, 3. 300,000. 300,000. Just every day 300,000. Look at that. Just short the whole damn thing, the whole range from the bottom to the top. Because this kind of strategy is called, well, I call it lacing. I don't know why it's called, but I kind of figure it out by watching and learning from this guys. What it means is that the way you trade is not like right now. The way you trade with small account is you're trying to short $6 and cover $2, right? But the way they play with this guy is because there's bigger account and money power is involved. You can short the whole damn thing all the way up, knowing end of the day will come down there. It's like if you think about SPI, right? If you have the money to start shorting, big amount of share size, but you can afford to hold for $20-$30 rip on your face, right? If you short this area, this whole damn thing, I mean, from 30 to 40, that's $20, almost a $20 rip on your face, right? And if you can afford it, if you have like a couple of $1 million, relatively, if you have 100, 200,000 in your account, you can start going 100 shares, 200 shares, or even 1,000 shares. That'll be okay. And that's what I used to trade, lacing, but a smaller share size, obviously. Because you lace ultimately knowing this thing would come down here, right? So you short this whole damn thing, and you wait until it comes down here. But the problem is you'll be down heaps unrealized on this thing. If you don't have the cash roll, you can't sustain this kind of strategies because you blow out. Yeah, but these guys, they know they won't blow out. So the idea is obviously with a $5,000 account you can't do this. Yeah, but if you have 50,000, 60,000, 100,000 account, then what you can do is if you go on 100, 200 shares, you'd be down what, 2-3 grand on it. You're not gonna blow out, right? But you can wait until it comes down here and you can cover it. So so once the account that I'm growing, once it's above that 10,000 above that area, this will be the strategy I start implementing. I would no longer trying to short 6 and cover up 5. I'll be looking, but fundamentally with this kind of strategies, you have to be right about the direction of the stock. Because you go on a bigger share size and you play in bigger range, if it decides to go higher than what you expected, then you can lose major amount of money. So the one thing that you really need to specialize on is that when that top area is or not. Yeah, short. I mean, when you get to their size, you just, I mean, I'm pretty sure he banked massive on this because look at the volume of this thing. I mean, even if each entry is like 1,000, for this guy banking $1 million is probably going to be, big. But even if each entry point is like 1,000 shares, I mean, he's in a lot, right? And just covers it all the way here. And it pops, he slams it back down. So this is kind of a lacing kind of a strategy where you shorten an area, but it's a very dangerous thing if you don't know what you're doing, because if you fundamentally wrong about like this thing, if you start lacing this area, for example, you would lose easy. You can blow it. I mean, if you have 10 million account, you could easily blow it, right? That's it. You just need the cash roll to be able to hold that, and that's how they play this. Major players. But obviously no one would tell you this kind of strategy because that's their bread and butter. And if you try it with your account size, it won't work anyway. So those are a couple of things you guys gotta consider in. But that's the aim, right? If you have a $20,000-$30,000 account, you can even start doing that, the lacing. But you gotta go obviously smaller share size. If they're going 1,000 shares for a $1 million account, then you gotta go 100 shares, right? But the good thing about this is it also gives you that $10-$20 per share profit. So guys, expect that video to come out. Me losing $1,000 That was a pretty really ironic because I was so excited to long, and the one time I long, I got burnt on it. So yeah. So what stocks are you guys watching? What's on play? I know this one is in play for me because I already located the shares. It's short tail restricted as well. That's another thing you guys gotta keep in mind. Short tail restricted, it means that they can only stop it from going up. Sorry guys. They can't hit the bid, right? They can't hit the bid. What that means is they cannot, that downside force would not be able to work. Is it short? No, it's not short tail restricted. Can you check? It's not short tail restricted. It came up as short tail restricted just then, though, right? No, it's not short tail restricted actually. So to be short tail restricted, it has to be like 10% down on a day. So if yesterday this was 10% down, then they would put short tail restricted for the remainder of the day and today as well. So the locate fees, they also there are different brokers that have cheaper locate fees, yeah. Because we with the small account, we don't have access to those kind of leverage. I mean, these people pay 0.001 cents for commission first thing, and locates they pay less than half of what we pay for it. So that's the problem with the small account. It's really the obstacles are a lot more than when you have a bigger account. If you have a bigger account, it's very easy to make money. You can brute force. Yeah, Centerpoint, and there's other brokers. So Centerpoint is kind of becoming a bit shit now. It's also crowded. Trade Zero is crowded. I mean, I got locates for literally I mean, look at that. I got locate at 0.05 cents, right? And anyone else here in I'll ask what the locates are. Let's see. Yeah, right now it's actually, I think, wow. So at Centerpoint it's 0.007, right? And we're paying we're paying ridiculous amount for it. Yeah. So at Centerpoint it's very cheap, whereas here it's expensive. So All right, guys. I'm just gonna stop here. Thanks for the reminder, Stevo. Just gotta focus and trying to bank a little bit. I appreciate it for coming in and watching, guys. Have a good trading day, and I hope you all bank. No worries, my man.